the worst of inflation behind us? The latest US inflation report suggests a notable shift in the right direction, offering cautious optimism amidst ongoing economic uncertainties. In May, the core consumer price index, excluding volatile food and energy prices, rose by just 0.2% from the previous month. This marks the softest month-on-month increase since August 2021, coming in below economists' expectations. Annually, core CPI increased by 3.4%, showing improvement from its peak of 6.6% in 2022, but still distant from the Federal Reserve's 2% target based on the PSE index. Underneath the headline figures, encouraging signs do emerge. The breadth of inflation pressures is narrowing, with fewer components experiencing significant price increases. Sectors like personal care services and recreation services showed month-on-month cooling, while categories like motor vehicle insurance transitioned from being a source of inflation to a minor drag. However, challenges persist, particularly in the categories like shelter, where rents continue to rise steadily. Despite some moderation in certain areas, economists do remain cautious. Federal Reserve Chair Jerome Powell acknowledged the favorable data but maintained a guarded stance, indicating that policymakers are likely to hold interest rates steady at current levels until at least September. The outlook remains clouded by lingering uncertainties such as potential future impacts from supply chain disruptions and global economic dynamics. While the latest report provides a temporary respite, economists and policymakers alike emphasize the need for sustained data trends before concluding on the trajectory of inflation. The coming months will be critical in determining whether recent improvements signal a lasting trend towards inflation moderation or merely a temporary reprieve in a volatile economic environment. And for more on this, we're now being joined by Mithali Nikor. She's an economist from New Delhi. Thank you so much for joining us on World Business Watch. Always a pleasure to have you.
Thank you. Thank you so much. Very good morning.
Morning. Now, my question to you, is the worst of inflation over in the United States and other major economies?
So I think, when we look at these global trends at the moment, like you rightly said, the Fed is still not happy with the trends in the inflation rate because they're still not touching their target of 2% inflation. And when we look at trends in other developed economies, like for example in Canada, where an interest rate cut is coming, that is also likely to have somewhat of a knock-on effect on the US economy. So I would say that at this point in time, when we look at the inflation rates, definitely on a downward trajectory, but certain categories which are sticky, like even food prices, while the inflation rate is moderating there, they are still higher than what consumers typically expect them to be. And rents, which are the biggest component in any consumer's consumption basket, continue to rise. So I think also because of speculative reasons. So I think we cannot be so exuberant at the moment. And I think the Fed has read this right, which is why they say that, there's only going to be one more rate cut in the next 6 months. And that signals that the Fed also expects that inflation moderation will not be so quick.
Right. In fact, I was just going to come to this. You're right. There is cautious optimism around this. When do you see the Fed realistically cutting interest rates, and what are markets expecting here?
So I think there's a lot of factors at play. The first factor at play is, of course, the US election. We know that the elections are a time when there is a lot of uncertainty in markets. There is a lot of trading activity that takes place on the stock markets, which is also something that impacts inflation and impacts core indicators. The second factor at play is, of course, the Middle East situation, where a lot of the oil supply comes from. And we are looking at a protracted, a disturbance in the region, and as a result, oil prices are always, on more of a uncertainty around oil prices. So we have that factor at play, and then the third factor at play is really around the dollar denomination and the dominance of the Chinese exports. I mean, how is that going to play out really in the US dollar denomination across the world? These three factors combined are going to impact the Fed decision. So I really don't think it'll be for this quarter. It might be somewhere, in the October to December quarter, especially when the US election is taking place.
All right. Okay. So I just want to understand, will consumer confidence get a boost if the Fed cuts rates?
I personally don't think so. When I look at the reading of the US consumer today, the US consumer is already coming back to the market. The US consumer is already showing signs of optimism and strength, particularly when we look at categories like electronics, when we look at categories like stock market participation, when we look at, the homeowner, as a categorization, we can see clearly as per the data that Nicole Associates is analyzing that the US consumer is coming back to the market and is becoming a stronger force again for the global economy. So I'm not sure that they are necessarily waiting for the rate cut. And the main area on which the US consumer will benefit from the rate cut is in terms of mortgage prices, right? The basically mortgage rates. That of course will bring a big relief to the consumer, but that I don't think they are waiting for that. They're already back, and consumption data shows that they're already participating much more in the economy again.
All right, well, Ms. Nicole, you've pretty much very neatly summed it up for us. Thank you so much for joining us on World Business Watch with your insights on this.
Thank you so much.
For latest news, download the WION app and subscribe to our YouTube channel.